Thank you very much, Stephen, and thank you for coming today. I'm just going to talk for 5 minutes or so before handing over to Rose. Now, last year, you may recall that I said that despite the introduction of GFAS and 2 thematics on long-term insurance and investment intermediaries, the Commission was still somewhat uncomfortable with the level of compliance in this area, although there was also plenty of evidence of good industry practice. Accordingly, this year we undertook a 3rd thematic on long-term insurance and investment intermediaries. Rose will talk about this in detail, and the feedback is already on our website. To summarise, the 3rd thematic demonstrated a material improvement in standards since 2012, although it still revealed weaknesses in certain areas. Nevertheless, thanks to the efforts of yourselves, the government, and even, dare I say, the Commission, the general quality of long-term insurance and investment intermediation in Guernsey has now reached a level where the Commission can use its scarce resources elsewhere. This is an important landmark, as the people of Guernsey need to have confidence that long-term insurance and investment intermediaries are giving them the right sort of advice on investment decisions that are important for their long-term financial welfare. So the Commission can now spend more time on general as opposed to life intermediary compliance. You may recall that in 2015 we undertook an initial thematic on compliance with our general insurance requirements in relation to the sale of add-on policies. This was in part a learning experience for us, and we learned broadly 2 points. Firstly, that our authorised insurance representative, or AIR code, needed updating. Secondly, that the general insurance intermediary sector in Guernsey had some compliance issues, for example, around training. Since that time, and with your help, we have crafted a fit-for-purpose AIR code and agreed a lead-in time for its implementation, not least around systems. And we have had a seminar to help embed the AIR code. We've also written to all general insurance intermediary firms to say that add-ons should always be offered on an opt-in rather than an opt-out basis. Views on this are divided, and one argument is that the customer needs to be, let us say, encouraged to buy certain types of general insurance because it is good for him, as indeed it may be. We understand this argument, but the Commission takes the line, like the FCA, that ultimately the purchase of a general insurance product has to be an active rather than passive choice of the consumer. People must make their own choice. At this stage, it would be unwise to speculate as to what we will find in our 2018 thematic. What I will say is that Rose and her team will adopt the usual approach for a thematic. That is, that the essential aim is to assess whether compliance standards are in place and to feed back both publicly and in private to certain firms where improvements are required. Enforcement is a secondary rather than a primary tool. Nevertheless, it is one that the Commission will use, as witnessed by its actions in the wake of the life intermediary thematics. We all know that the sale of general insurance in any part of the world has to fight against some pretty tough headwinds. Sometimes people avoid buying insurance because they are unaware of the risks they run in the course of their everyday lives, or because they hope that bad things will not happen to them, that money spent on insurance is wasted, that insurers do not pay out, or that the state will somehow come to the rescue. In face of these headwinds, and in an industry of tight margins, intermediaries everywhere have been known to cut corners sometimes. However, this view of the world is to imply that the customer and general insurance intermediary are in some sense at odds with each other. An alternative and more salutary view is that both purchaser and seller of general insurance have in fact a convergence of interest. Perhaps I can illustrate this point. If we look at general insurance from the purchaser's point of view, most people will be asking themselves a few simple questions when it comes to buying a general insurance product. These might be, do I need it? Do I already have it? Can I afford it? Do I understand it? Does it work? And as for the intermediary, He, on his part, may ask himself a series of simple questions about the product, such as, does it do what the customer wants? Does he understand it? Has he already got it? Is it fairly priced? Will it do what it's supposed to do? As you will, I'm sure, already have surmised, these two sets of questions are congruent in several places. For example, do both parties understand the product? Will the product pay out properly? And so on. There are therefore several common interests that bind the seller and purchaser together. So, subject to goodwill on both sides, it should be possible to give the customer what he needs and to make a profit, albeit within a compliant environment. This should not be rocket science. And in terms of the bigger picture, it is important for Guernsey that local people and businesses have the right degree of insurance protection and can buy it with confidence. That is all part of living in a safe, stable and fair Guernsey. Well, I'd now like to hand over to Rose, who will talk in more detail about our activities in the last year. Thank you very much.
Good afternoon, everyone. First of all, I'd like to thank you for joining us here today, and more importantly, for the help that many of you have given us over the period to assist in moving your sectors forward. I would also like to introduce Keith Parmentier, who I'm sure a number of you will already know. Keith is my right-hand person in the conduct unit and has valuable previous experience and knowledge both from working in industry as well as in other supervisory divisions of the Commission. As was mentioned yesterday, the Commission seeks to add value in all the areas in which it operates to help create an environment in which the good, skilled and hard-working can prosper and the reckless and wrongdoers face justice. To do this effectively and proportionately, we need to consider and be informed by the consequences of Brexit, innovation and ever-evolving international standards, not least in the area of conduct. And my presentation will give you an insight into our work over the last year. In our session today, I will begin by speaking about matters most relevant to those with a general insurance intermediary licence and talk about progress that has been made in relation to our expectations through the implementation of a new code of conduct and other initiatives of those advising or arranging general insurance or long-term pure protection contracts of insurance. I will then move on to other areas of importance for those of you with a long-term insurance or controlled investment licence and talk about our thematic work on sales practices on these products, the conclusions from which will be of wider interest and relevance to all. I will then touch on some of our supervisory and policy work for other financial services areas and our educational and consumer initiatives. Finally, I will summarise our plans for 2018 and beyond. You may recall that towards the end of 2015, we carried out a thematic on the sales practices of general insurance intermediaries, focusing on the sale of add-on policies. This was the first time that we had approached this subject, and we drew some quite significant conclusions. The main one, from our perspective, was that the Code of Conduct for authorised insurance representatives was out of date compared to what was happening in practice in industry, and as a consequence was no longer suitable for the way that business was being transacted. Importantly, though, the review did not find evidence of serious detriment to policyholders, although it did find evidence of poor practice on the part of licensees and their authorised insurance representatives. These deficiencies often applied to the sale of the core policies on which the add-ons were sold. This time last year, we were shortly due to release the consultation paper on the new Code of Conduct, which we developed with assistance from an external expert and in conjunction with industry. It was released in early December. During the consultation period, we held 2 drop-in sessions for industry to discuss any queries or raise concerns prior to submitting a response. We are grateful to those firms who gave their time, both at the drop-in sessions and in their representations, in giving the impact of the code due consideration from an in-practice perspective. With this assistance and feedback from industry, the new code is much more effective and proportionate for those who are required to use it and provides licensees with an up-to-date minimum standard to be expected from their representatives. You may be relieved to hear that I'm not going to go through the changes in the new code today, but I'd like to just highlight a couple of areas. The transitional arrangements in the penultimate section of the code were included to effectively allow for changes to be made to IT systems and policies renewing on an annual basis. Where a licensee does not have a previous opt-in for a consumer for a particular add-on policy, this should be obtained at the next renewal. Also, now that the disclosure of prior year premium is mandatory, in order to cater for system changes, a 12-month transitional period ending on the 31st of March 2018 is in force to allow for relevant changes to be made. Another new area in the code is in relation to vulnerable customers. Here we have included an expectation that an authorised insurance representative should recognise that some customers might be classed as vulnerable and take reasonable account of their needs. This is a new minimum standard, consistent with the growing global acknowledgement that those that are vulnerable should be treated fairly, having taken their particular circumstances into account. I will return to this subject later. The code became effective on the 1st of April 2017, and during April and May we held 6 workshops for industry, 2 for personal lines authorised insurance representatives, 2 for commercial, and 2 for compliance officers. Our aim through these workshops was to enable as many people as possible to attend, hence the 2 sessions on each subject. I was really encouraged that almost 40% of those who attended had never met with anyone from the Commission before or been to an event hosted by the Commission. 144 people attended, and all locally based licensees bar one sent at least 1 representative to the workshops, with others sending all of their authorised insurance representatives. The workshops gave me an opportunity to explain the legislative and regulatory structure behind the code and how the authorised insurance representatives fit into this structure, as well as explain the major changes between the old code and the new one. I've taken the liberty of incorporating the final slide from the workshops on the new code into my talk today to give you a flavour of our approach. We acknowledge that anyone can make a mistake, but it is the manner in which mistakes are addressed by the person who made them and their employer that can make all the difference. So often, this can be down to integrity and doing the right thing for the customer. As supervisors, we will work with the licensee to set our expectations of how this should be resolved, which may be through a risk mitigation programme, requiring the licensee to take certain actions to address the issues that have been identified. That said, where mistakes are made through poor or reckless judgment, or where this clearly is a case of potential deliberate wrongdoing and a risk mitigation programme may not be sufficient, as supervisors, we will consider whether referral to the Enforcement Division is the appropriate yet exceptional proportionate way forward. In June, we held our 4th annual seminar for the insurance intermediaries. The event was primarily designed to assist those with a general insurance intermediary licence, although we opened up the afternoon session to others. The seminar considered underinsurance and other current themes in the insurance broking profession and was attended by some 50 industry representatives. The seminar covered key topical insurance themes, including the risks of underinsurance, use of unrated insurers, identifying weaker insurers, and revisited the impact of the UK's Insurance Act 2015, the focus of last year's seminar. The day also included a thought-provoking session on vulnerable customers and how businesses could adapt to assist them. We were fortunate in securing returning guest speakers Robin Wood and Roger Franklin as the main presenters, fresh from leading masterclasses across the UK, where similar topics were on the agenda. The feedback that we received after both the code workshops and the summer seminar was that they were helpful and that industry would appreciate more of them. We will continue to offer similar events, and in keeping with the opportunities for self-assurance that were mentioned yesterday and in earlier presentations today, will ensure that there are clear learning objectives that can be taken back to your firm and put into practice. As always, we would welcome further input from you to help ensure that seminars and workshops deliver content that is helpful to industry and will consequently benefit firms as well as their customers. As already mentioned, next year our thematic work will be on general insurance. I would encourage all relevant licensees to revisit our thematic report on the sale of add-ons and assess whether improvements are still required and can be made in the areas that we highlighted whilst there's still time to do so, such as the lack of suitable arrangements being in place to meet training and competence requirements, and that licensees were not correctly identifying and recording complaints. I would even go as far to say that some authorised insurance representatives were unaware of the existence of the Code of Conduct at the time of our on-site visits in 2015. These weren't the only areas we highlighted, but are probably a fairly good indicator of some of the areas we may be considering in our thematic next year. You may also find it helpful to revisit the slides from the workshops on the Code of Conduct and the Code itself. Our 2017 thematic report, available on our website, may also provide you with some ideas. Clearly, those firms that have made improvements will have less to do as a result of our thematic than anyone who has failed to address concerns that we have highlighted on earlier occasions. As was trailed during last year's industry presentation, this year the Conduct Unit carried out a thematic review of sales practices in relation to long-term insurance business and controlled investments. You may recall that the Commission has conducted previous thematic reviews on the subject, firstly in 2012, in relation to advice given under long-term insurance intermediary licences, then in late 2013, when we included advice being given on controlled investments. The results of this latter review were particularly alarming, with 3 licensees being sanctioned following referral to and further investigation by the Commission's Enforcement Division, and 4 licensees subsequently surrendering their licences. Thus, with the backdrop of these previous thematics and streamlined requirements under the sectoral conduct of business rules, 2017 was an appropriate time to review how industry has adopted to the Commission's messaging and these changes. The thematic was led by Keith, who, with Jeremy and myself, will be happy to answer any specific questions on its conclusions. In our 2 previous thematics, information was only sought from those we planned to visit. This year we issued a questionnaire through the Commission's online portal to the 40 licensees who had told us that they provide advice to retail clients on controlled investments or hold long-term insurance intermediary licences. This population included clearing banks, private banks, stockbrokers and other advisory firms. The questionnaire was designed to address key issues raised from previous on-site visits and look to form an overview of how firms conduct their business. For example, we included questions on call recording and on the use of personal email accounts. On receiving the questionnaire, 4 firms told us they no longer provide advice to retail clients and so did not complete it. Questionnaire responses were submitted by all but 1 of the remaining firms. I'm particularly grateful to those firms and their honesty and completing the questionnaire. Our thematic work didn't just focus on the responses, but included on-site visits to 5 licensees. Keith led each of these visits and was assisted throughout by an external consultant, who had also joined us in the earlier thematic visits, together with 2 other members of the conduct unit, one of whom had also been involved in the previous thematics. This gave us a first-hand opportunity to see how sales practices had changed since earlier visits. I would expect that many of you here today would have read our thematic report or attended one of the workshops, or both. Again, we tried to accommodate as many people as possible by organising 2 sessions for financial advisors and 1 for compliance. Altogether, just over 100 people attended these sessions, which were well received by those present. A key message being that everyone, Commission and industry alike, has a part to play in moving the sector forward. In the thematic report's executive summary, we highlighted 6 main areas which we felt improvements could possibly be made. These are shown on the slide. However, there are a couple of other matters within the report that I will touch on now. Yesterday, mention was made of the FCA's mission document and the Commission's similar document, Our Regulatory Framework. In its mission, the FCA has restated its commitment to protecting vulnerable retail consumers, considering both consumer capability and vulnerability when making decisions. Its chief executive has observed, and I quote, "We recognise that vulnerability itself changes during an individual's life and in different circumstances, with consumer income being only one factor in assessing vulnerability." Our regulatory framework identifies our role in the protection of consumers, where normal market conditions cannot apply, by creating requirements typically to facilitate customer decision-making or to control outcomes from the decisions customers actually make. In this, consumer vulnerability is a key factor. Turning back to our thematic questionnaire, we asked licensees if the firm's policies and procedures identify the steps to be taken by a financial advisor when a customer is first identified as possibly being vulnerable, and to provide their definition of a vulnerable client. The responses were quite surprising, with 46% of respondents not having a vulnerable clients policy. One respondent based vulnerability solely on age, whilst others identified a wide range of possible scenarios. 2 respondents advised that they were in the process of drafting vulnerable clients policies. The thematic report includes examples of those that licensees might consider as vulnerable. You may find this helpful, as with an occasional paper issued by the FCA in February 2015, and which includes a practitioner's pack intended to support firms and share good practice. This paper highlights that the pack is a helpful resource, not the FCA's view, and I would echo this comment. In relation to the firms conducting self-assurance, our thematic report is quite detailed and covers a number of topics. It identifies many areas that enable a firm to benchmark itself against its peers. Indeed, there are a number of questions which have a rather surprising number of outliers. Here, if we had time and resources available, we would query some of the more curious responses. Instead, we are asking for your engagement on these anomalies. We have recommended that licensees review the paper to consider how they fare and implement changes to their policies, procedures and controls where required. Conclusions and actions taken in this regard will be a consideration for the Commission in respect of the self-assurance that has been provided to the licensee's board by undertaking this review. Now turning to our other supervisory and policy work, we have carried out on-site visits and risk assessments at bank, insurance, insurance manager and insurance intermediary licensees, in accordance with our risk-based framework, thus increasing our exposure and expertise on the fair treatment of customers across the sectors, as with each of these there is a local consumer nexus. We also continue to supervise all low-impact insurance licensees through reactive supervision. The Conduct Unit continues to assist and support other areas within the Commission on conduct issues. Consequently, when a significant conduct risk is identified on a licensee's full risk assessment, a Conduct Unit representative will be asked to be part of the risk governance panel that quality assures the work of the supervisory team. We also assist our supervisory colleagues through regular contact with the Channel Islands Financial Ombudsman. Under the law establishing the Ombudsman and the Memorandum of Understanding between us, the Ombudsman informs the Commission if there are matters of concern to it which may have an impact on the work of the Commission. For example, the Ombudsman informs us if particular licensees appear to be generating a concerning number of complaints, as this may indicate poor licensee conduct. I would hope you're already aware of this, but just in case, from 1st January next year, the Ombudsman will be publishing the name of the firm involved in any determination that has to be made. Although currently no determinations have been published by the Ombudsman, its website has a number of case studies on banking, credit, investments and pensions. You may be relieved to see that there are no insurance cases as yet. Turning to 2018, we'll be considering more closely, together with other colleagues in the division, the effectiveness of the codes that are currently in place for the conduct of business by insurers licensed in the bailiwick, in particular for those insurers with retail customers. This review will also consider whether gaps exist against current international standards, and if so, whether it would be proportionate to address these gaps locally. Over the past year, the Conduct Unit has continued to be or become involved in a number of policy initiatives with the interest of consumers and consumer protection at heart. I shall touch briefly on these to give you an idea of some of the topics we've been progressing with others at the Commission and from elsewhere. We've been working with colleagues in the Fiduciary Division on the Lending, Credit and Finance project, which is progressing the consideration of consumer credit legislation and the regulation of alternative financial services businesses. And here there is a strong emphasis on innovation, with that being one of the key areas covered in that division. My colleagues in Fiduciary spoke in depth on this earlier today, and if you missed that presentation, I would suggest you have a look at it when it becomes available on our website. However, at this time, I would like to thank all of you who responded to the recent consultation paper on the subject and your involvement in the workshops and feedback sessions that have been held. Your comments are greatly appreciated. We are also involved in the project to regulate pension providers, pension schemes and gratuity schemes, which resulted in a change to the fiduciaries law and the consequent introduction of conduct to business rules. These rules mirror many of the requirements for investment in insurance intermediary licensees to assist firms which may have more than one licence through having common conduct to business requirements, apart from a section of rules that relate specifically to the pension schemes and gratuity schemes themselves. Our relationships with the Guernsey Citizens Advice and with Trading Standards have continued, with the former playing a significant part in taking the Lending, Credit and Finance project forward. Financial exclusion, an area of common concern, continues to be on our radar. The Commission continues to engage on this subject, remaining mindful of the licensing requirements in this regard. We continue to consider and learn from developments, good and poor practice in other jurisdictions, and have met with other regulators to discuss common concerns at both the licensee and sector level. We have also attended relevant training events to help us gauge progress locally in comparison to practices elsewhere. I've mentioned on a previous occasion that I like to describe the role of the Conduct Unit as narrowing the gap between the provider of financial services and the consumer who acquires them. We are working with industry to ensure that consumers are treated fairly and that they're sold products and services from firms they can trust. We're also trying to improve the information that is readily available to consumers, either directly or through those that have a face-to-face relationship with them. This in turn should lead to consumers having increased knowledge, a better understanding, and being more able to make an informed decision. I've already mentioned some of our educational initiatives for industry, the workshops on the introduction of the Code of Conduct, the annual seminar, and the workshops on the thematic. Altogether, we've held 10 different events for industry with close on 300 attendees and offered 2 drop-in sessions. Thank you to all who attended, especially those who provided feedback. If there are any burning topics you would like us to cover next year, please let me know, and I will see what we can do. You may also have noticed that the Commission took part in World Investor Week in early October. This was jointly organised with our colleagues in investment. World Investor Week is an initiative of the International Organisation of Securities Commissions, IOSCO, of which the Commission is a member. We held a breakfast meeting for interested stakeholders and partners who have a direct link to local consumers on the work of the Commission. We also released a daily tip of the day on social media, and I'm sure you won't be surprised to hear that one of these tips was, as the saying goes, if it sounds too good to be true, it probably is. We have continued to enhance the consumer pages of our website, and if you have any non-branded information that you think may be useful for consumers that we could add, please don't hesitate to contact me. In conclusion, I will touch on the Conduct Unit's plans for 2018 and beyond. In view of the variety of subjects I've covered today, in order to be cohesive, I've incorporated much of our future plans into the sector-specific parts of my presentation. The Commission's supervisory framework enables us to focus on the areas where risk is unacceptable. These risks may relate to poor conduct and poor consumer outcomes, and may also be demonstrated by poor corporate governance and poor culture. We will continue to assess and address these risks with licensees through thematic and other supervisory work, being mindful of how global events and international standards are influencing expectations. Where existing regulatory requirements are insufficient to address these risks, due consideration will be given to whether the existing framework may require enhancement, engaging with industry and relevant stakeholders at an early stage if such a need is identified. In order to narrow the gap I mentioned earlier, I remain keen that the Conduct Unit continues to further financial literacy initiatives with industry, other stakeholders, consumers, and the community at large, focusing our efforts in areas where we can have the greatest effect and working with others where we can. As I've mentioned before, we will listen to what you have to say. We will work with you to enhance the regulatory framework underpinning your businesses, to facilitate you being able to meet consumer expectations, that the financial services and products they receive from you meet their needs, and that these financial services and products have been provided by firms they can trust. We are grateful to you, and I look forward to your continued support in the future. Thank you for listening.